Happy Saturday, everybody, and welcome back to PreciseAlgorithmTrading.com. We're going to do our weekend review right now and uh, just take it all in. Um, got some. Let's start here with automatic trading system. I've got three of them, and this is the YM. It's the Dow futures contract, and we got a new green dot. I believe that was on Friday. We could check here. Uh, and that's good. Green dots are new peaks in our equity. This is literally the results equity curve of how the systems trade. Um, and so our YM equity is up. And that peak, yeah, it was right in here on 9:15. So we traded 4 times on Friday. Um, for a net gain. So that's good. Not much of a net gain. That's the equity peaks are just right back in line with each other here. But when you add, this is 15 months worth, or they're almost. Um, this is what it looks like, and that's it's good. So, and by the way, in the future, I am going to be able to splice together. We've been doing this long enough. I can splice together multiple charts like this to be able to come up with a sort of a total equity curve and what it's going to look like. Maybe for instead of just 15 months, maybe 30 months. So, and we can keep doing that going forward. At least that's in concept. So I haven't done it yet. So that's why I say it's just an idea right now. It should work. Here's the Russell, and it's been nothing but really demoralizing lately, and it hasn't traded. There you go. It had one trade on the 15th, but it trades a lot less, and in the scheme of things, it's fine. It's just it trades a lot less, and it needs to get going back up again. This is about 15 months of that data. And then here's the NASDAQ, which is still my favorite because it's the most, it's a little volatile as it got through here. But so was the Dow, and but we've had new equity peaks recently. This is Friday's trading. It was a little net negative. This was that $5,700 negative was tough to take, but we regained some of it, which is good. And in the scheme of things, everything's fine. It's just sometimes it's hard to take, and that's why trading is hard. That's why people quit. And this is what it looks like, in the 15-month deal. So again, everything's fine with the automatic trading systems. Yeah, actually they're good. So let's flip over to Thinkorswim. I took out a bunch of noise. I like to look at all the stuff that I keep on the charts. That everything's pretty relevant. But for the sake of this review, I thought it'd be fun to take some of the stuff out. And I have identified 5-bar patterns. 5-bar patterns, which is basically where you get a high. That's what that is. That yellow dot right there. A high on both sides of. Basically, you take 5 bars and that's a high. You take 5 bars and that's a low. It just happens to be on the same candle, which is not usual. Normally it's a pivot, and that's what I call it right here. Here, that's a pivot. That's a pivot. There's some more important pivots, and there's less important pivots, and that's what makes up trends. So that's why I'm showing it to you. This weekly over here, it happens to work the same way when I talk about markets being fractal. That's why the pivots work in a daily chart. They work in an hourly chart. You can see them on a chart. You can see how trends form. And then on a weekly chart, really, the weekly, like the pivot low right there at 43.37 ish. which is where if you, I'm actually the pen is on the weekly chart, but you can see the line on the daily chart going across there, and it happens to be a major low right here. So that's why we need to be looking at this stuff and paying attention, because that is a trade level. When it comes down like that and then it forms a pivot and it looks like this on a chart, you can see it comes down into it and then it bounced off of it. In fact, it comes down into it, comes back up, comes into that zone again, and that's a bounce off of that. So we're coming into another zone here, and are we going to get a bounce? This candle on Friday was a tough day to take. Markets pulled back, over 1% in most cases, it looks like. The Dow was only 0.83%. So, and by the way, this stuff works there too. So really, if we throw the true Momo up here, which is the the momentum indicator we use, and it has arrows on it based on potential sell zones, and they just happen to sometimes, like this one, lined up with that 5-bar pattern, that 5-bar candlestick. This one back here, since it didn't take out the low, that one right there obviously didn't turn out as relevant, and you don't necessarily know that in the moment, but you can actually, if you project it on this, I don't have it drawn, or I don't have it plotting this way, but in a 5-bar pattern low, you could put in the high dot, and when it breaches that, it's a potential buy, because you've got a 5-bar pattern low that's formed, and then when it breaches that to the upside, which is the very next day candle, and it gets pulled underwater, but it never takes out the low. And you don't need to set the stop right at the low. You can set your stop right below that low, and that way, if things go back up, then you're well on your way, and if they don't, then you're not really risking much. So I'm not necessarily advocating that that's what we're going to do right here. I'd like to see a little bit of reversal before we did that, but we are underneath this pivot low's high bar. So you could buy here and set your stop right underneath there. And I happen to think, because of this giant almost full Marubozu candle, which is a big bearish candlestick, that this pivot may not hold. However, we might see it right out of the gate, and we could see it actually in the early futures on, say, Sunday night or early Monday morning. This thing could bounce and and if it does, this low right here is very potentially going to hold. We do have negative momentum setting up on the true Momo indicator over here. We do have a down arrow on literally, or actually last week's candlestick, not this week's, and so we do have pressure to the downside. 1, 2. This could be move 3 to the downside from a wave pattern, and if it is, then hold on tight, because we could come all the way down here to this 40.48 on the S&P. At the very least, we would come down and retest this area down here. At the same time, we are above these Harvard lines, and I put them on here for a reason, and that is to say 40.48 is way down here. I think the Harvard lines are going to hold, but that's why we monitor this stuff day to day, and that's how we trade. Let's look at the Dow. Same stuff, but it actually looks a little bit, it's less. It didn't come unglued as much, and it's got a little further to move down to hit this stop, or that pivot, or this pivot. It's interesting to me that this candlestick right here, this pivot candlestick, that's where this price came down into, about into the middle of it, before it took off from there. So if this zone right here really meant that it was a bullish zone and took off from there, then we shouldn't retest it. We just retest into the area, which we've kind of already done, into the middle of that zone. So we'll see. And we do have a squeeze setting up, and we have nothing but positive momentum over here. We do have down pressure on the weekly. Just taking it all in, really, and see which thing matters most. The Russell, now we're quite, we've come almost all the way back, and literally right here, if this thing breaches this zone down to the bottom here, there's an awful lot of these magenta lines and the Bollinger Bands. If it breaches this zone to the downside, then this market's really going to get bearish really fast, a lot worse than it is now. Maybe see something like this all over again. But if not, this zone will hold, and we could take off from here. This, to me, looks like it's setting up as a zone of, obviously there would be a lot of pressure there to either buy or sell. Probably both, and then whichever wins is where we're going to set up to go from there. That's literally how these zones work. There's a lot of orders set up right in there for buying and selling, and then whichever way is the path of least resistance is going to be the way this thing's going to go. The more orders there are to sell, then selling through that's going to be the answer. The more orders that there are to buy, then popping out of there is going to be the answer. And it might, what it really comes down to is what's the big money going to do? The big players, the funds, the Goldman Sachs's, and those types of things. So here we are at the NASDAQ, and it's obviously set up. It looks really still pretty bullish to me. This is a big, still nasty candlestick, and you can see big, nasty candlesticks can reverse back to the upside. But like this one did not breach this zone down here. If this zone gets breached, then this thing has to reverse back to the upside, make a new 5-bar pattern up, or else, eventually the whole idea of higher highs and higher lows will lose, and we'll start putting in lower highs and lower lows, which we're in the area of that potential right now. We have to put in a new lower low, and then come back and put in a new higher or a lower high, and then we've already got that sort of setting up here, but we don't have the lower low in yet. Alright, and IYT, very similar situation, although I can say if this thing pushes higher out of the gate Monday morning, then I'm actually seeing, I believe this, I'll call it a bubble low on the True indicator is lower than this one, and you can actually see the price was higher, and if it stays like that, then that would be a bullish divergence. Bullish on the indicator, bearish on price would set up to be a bullish divergence. What's oil doing? Besides giving me a problem here. Alright, there we go. Oil is tearing off to the upside, and the same thing goes with all these 5-bar lines. So we're looking to potentially, it's been a while since we formed a 5-bar line, 5-bar pattern, and so I'd be looking for that up here. And when we do that, I think it could be a trading opportunity to the downside, because I'm seeing higher prices here and potentially lower formings on the True indicator. If this turns into a blue bar or 2 blue bars, that would be the place to potentially take a trade to the downside and put a pretty close stop if this price action doesn't get too volatile. That's not a recommendation. That's just something where I'm going to be looking at to possibly take a trade. And I will do that using the USO exchange traded fund as opposed to the futures contracts. Last but not least, let's flip over to stockcharts.com and type in bullish and look at the bullish percent indexes. The industrials didn't move on Friday. The NYA minus 0.74%. The transports didn't move. The NASDAQ down 1.88%. The SPX down 1.96%. The OEX up 1.85%. That is a potential tell. And the NDX minus 9.09%. I would say that negates the sort of the potential tell on the S&P. So, this is going to be the one to watch. If the NDX, the NASDAQ starts to really tear off to the downside, then this thing's going to flip over or continue this column of O's to the downside. And really it's a matter of whether we're going to put in a new big column of O's like this one and exceed this previous column of O's to the downside and put in a point and figure sell signal. So all right, that's what I got, and hope everybody's surviving this bit of volatility in the markets, and I hope everybody has a great weekend. So take care, good trading, and we'll talk to you later.